The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And what do we have? We have a very interesting day. I would say the most important aspect of what I'm looking at this particular point is where the Dow closes. No, I shouldn't say just the Dow. It's where the Qs, the NASDAQ 100 trading vehicle, QQQ Trust Series, I want to see where that closes today. And I'm going to explain a couple of things that I'm looking at. And when I was on yesterday, even though the market was only down a little bit, my basic premise was that as I saw it on a technical basis, I still wasn't getting sell signals. I had an email from one of my subscribers who loves to work with options, well, with other things, but it was mostly taking opportunities in the options arena. Whenever possible, and said, I'm long the Dow Diamonds. What do you think? And I said, I wouldn't like a close under 147.10, but you can call me nuts, but I'm still seeing strength. And I wasn't sure just how it would play out. But you've got May, the whole of May, if you're in options. So my thinking was that there would still be upside activity. When I did the analysis last night, what I did was I looked at how the market pulled back yesterday, and yet certain technical indicators that I value at certain times. Other times I don't read them at all, but I value them at certain times, and this was the moment when I did value it, really didn't give much away at all. I'm showing you here, if you're looking at these charts, I'm moving this away. This is a 120-minute chart making these various cup formations. This is a leg C, maybe a peak C in the 120-minute chart. A great rebound from the low yesterday, having gone from a high of 50 in the 1595 area down to a low of 1576, I think it was. Yeah, 1576. Let me type that in. 1576. Dot. And so this is a very nice retracement. I have to call it a retracement at this particular point. However, look at this here. Look at the way I use these technical indicators. And I'd be remiss if I didn't put a lot of input and import into those indicators. After all, what are indicators for? They're there to be able to give you a sense, a GPS, as well as the barriers. You know, there's barriers when you're going through different sections of the road, they're doing repair, and they have all these barriers. Well, I always like to say the ChapmanWave, for those who have had my market letter for, I met Jennifer down in, when I had that meeting down in San Francisco a couple of weeks ago. When I've had long-term subscribers, very, very long-term subscribers, they know that my emphasis has always been to try to get us through the Straits of Gibraltar. Anybody know the Straits of Gibraltar, that little canal that really goes in the ocean, that goes through huge rock and Spain. And you've got, it's very treacherous. Somewhere, or the Hebrides, if anybody knows Mendelssohn's famous Hebrides Overture when he was visiting and he wrote these pieces, Scottish Symphony and the Hebrides, that stormy ocean. Well, if you actually look at the chart, and everybody talks about volatility, I'm saying, what volatility? If you live through 2007, 2008, you're turning around and you say, or 2009, say, what volatility? This has just been an incredible market. Buy the dips, buy the dips, buy the dips. Well, look at this beautiful indicator right here, that black line. That's the 9-period moving average. Let me open it up a little bit. I think you can see it a little bit better there. This is the E-minis. So as a result, I really had no choice. But this morning, we went long the Dow, via the Dow, the DDM, 200% long. At this particular point, right as we speak, let me just check my notes. I don't want to talk out of turn. 90.48. Has it hit 90.48? I don't know if it's hit 90.48. Let me just do this because I just, people always ask me, so what's your position? Well, I've got another penny to go. And then the DDM is at a point where I can raise the stop. And unless we have a huge gap down in the morning, or even intraday, it's just something terrible that happens, at least, let me just double check. And at 96, yeah, at least we can garner some small profit at worst. Now look at this. If you are looking at my chart here, this is the E-minis, which of course the S&P futures is the junior, trades overnight as well. So you've got a B/G, not a G/B, because over the past 6 months or 7 months, I've been making a big emphasis about trying to put it, to show as a quick visual where my emphasis is, that I was not thinking this is a right arm extension peak G. I'm thinking of more as a peak B if there's no new high above 1595.50 today. And if there is, it needs a 1595.75 to start leg C. If there's a failure, it'll close underneath yesterday's low of 1576, making it as easy as possible. Well, let me run the numbers, because I love the QQQs. Guess we're going to talk about that a little bit more later. Look at this, leg C, a beautiful move up in the Qs. Larry had a fantastic call on Larry Pesavento on Apple at the 93 level, 393 I believe it was, and Apple now is trading at 447. Beautiful, beautiful move. I looked at the options for $5 the other day, and I was just 2 days. Was it yesterday morning? Whenever it was. And I thought, we'll never get it. Actually, it was a chance to get it at $6, and now it must be way higher. Didn't take that opportunity. Pity about that. So my thinking was yesterday in that response, you might think I'm nuts, but in a bear market, we would have to have a triple-digit down day today to say to me, right, we've now got the sell signal in place. Let's see if we go to a sell mode in the daily. Let's see how the weeklies participate. I had nothing like that. Or every time the market pulled back yesterday, there was this attempt to try to bounce. And I saw a rotation in my Dow Quartet, GE, IBM, Triple M, and UTX to say, hey, we've done going down for right now. We're trying to find some kind of support. Hey, I might be nuts, but I'm trying to do a technical analysis here. And so let me run the numbers, and then we can go to our callers. We've got the Dow up 94 as I'm speaking, 14,796. The comp index is up 32 at 3,333. The S&P is up 9 at 5091. The gold is up 90. I love the action in gold right now. The gold is up $19 at 1465. You remember I spoke, I'm going to take 1 minute here to talk about this, because I believe that it goes towards understanding the plethora of techniques I've developed over all the years that I've been doing this. There isn't one technique, but there are many, many techniques. And what I said was, if I'm correct, and I always have to add if I'm correct, because we're looking at the future. Who can really predict the future? If I'm correct, then that climactic volume spike in the GLD, this is actually, the emphasis there was that the capitulation to the downside in price, going to 130.51, the GLD, that's the gold, Spider Gold Trust. That said to me, if there is a volume spike, it has to coincide exactly on the day. I don't like a day before, a day after. Oh, they can work. It's not the way I use volume. So it means it's just rare that it ever comes about. And if it does come about, it says, this price should rally. It doesn't give you a height. It says it's going to make a big flat base arch formation. And in that arch formation, it doesn't give you the height, but it says with that 28 to even 52-ish bars, that'll be days, you should go higher before you come back and get towards that 130, in this case the 130.51 area, on any failure of the pattern. And that's what I'm liking. So I'm not saying that I think this is the greatest buy in the world, but in the rotational aspect, gold has been smacked. The stocks have been smacked. I'm not playing the stocks at this particular point. There's just too much rotation going on. I just can't do that. Whoops, everything disappeared. So what I was looking at is the TLT is at 123.71, and it's worth just taking a moment here to look at the TLT because it is held so beautifully. It's making another peak D in the daily chart, and that peak D is like a rising wedge to a certain extent. A rising wedge, you really want a wedge. In this case, it's a rising price with a slight wedge. It says more that there's a rectangle formation going on that could correct towards the one at 123.67, down only 32 cents in the TLT, the Lehman 20-year Treasury bond fund. Yeah, we could pull back. Probably the 122.10 low is going to be a real test, but the little gap up high of 120.90 on the 12th. So I'm anticipating that the Treasury, that U.S. bonds, and I'm looking at the TLT specifically, is telling me that we've got to be watching out, that this is a very select rally, that we could get some kind of a sharp pullback at any point, and bonds holding this well in the daily, but especially the weekly, having bounced quite nicely back into the congestion area, is specifying quite clearly that we are in a trading range, that the Fed is propping up bonds just as it keeps on smacking the dollar on the head. Even the dollar's having a fantastic move today. I'm a little behind. I'll tell you right now that the dollar is at 82.19. I actually think it might be a tad high. It could be at 82.20s, going for the 9-period exponential moving average. But the weekly chart is saying, hey, nice action, but it's all within the trading range, just like the TLT's in the trading range. And then finally, I wanted to look at EUR-USD because we had a peak D top made yesterday at 1.32418. And although there was a nice rally attempt, I still think that 1.33, the 200-period weekly moving average, is going to be the level to watch, and that the support is real close by in the 1.300 to 1.295 area. So let's go to our first caller. We've got Joe in Boston. Hi, Joe. How are you?
Good, Basil. How are you?
Very well, thank you.
Hey, Basil. Before I get to the Qs, I just wanted to add to your point that it seems to me, just from watching the market and the feel and everything, and you do the same thing, that money, everybody's talking about sell in May and go away, and when everybody's talking about it, it's just not going to happen. You know that. And then the other thing is, I just see the money might move out of the utilities, the consumer staples, the big Dow stocks, and into the tech. And that's lagged for so long. So I think money, you're starting to see it already right now. You're the Apples, the Googles, the Microsoft's already made a big move, the Intel. So all these big cap techs that have lagged, you're seeing the smart money, I think, start to rotate now. They're not going to get out. They're going to rotate out of what's done well, and they're going to hold.
And you have to include the internet sector as well, although technically the high-tech people don't kind of immediately put it into that category. Not only that, you've got the hard drives, you've got
Western Digital, Seagate, all of them. Yeah.
Right. So that's a great point, and I'm going to go through this because I want you to talk about, no one has spoken about this, the monthly chart of the Qs. Right. I'll be right back with Joe in Boston making great points. We'll talk about the Qs. Dow's up 102, S&P's up 13. I'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, and let's see. Oh. All right, so we've got Joe in Boston. Sorry, Joe, I had a message there from my producer, and I just needed to double-check it. So, Joe, we're looking at the QQQs. Now, look at this chart. This is the monthly chart. Now, this is for you. This is really a broad-ranging question. This is a question. This is more a market watch question, right?
Yeah, because you follow the trends and you see the money flows, and you know what are you seeing? Are you seeing the same thing?
Well, I am seeing the same thing. In fact, I haven't had a chance to talk to my good friend who has a semiconductor company. Probably see him in a couple of days when we play tennis again together. But I have noticed from the conversations I've had with him, and this is exactly what's going on in the market. If you look at the semiconductor index, of which Intel used to look almost identical, it's as if you had a chart of Intel INTC. I'll just show it here, and then I'll quit. And that's made a peak D top in the daily, but it's not a top. I should just say a peak D. And leg C still very positive in the weekly. The monthly is a fabulous rebound, but I have to call it a rebound. The SMHs, there we go. Keep your eye on the chart, and here it goes. The SMHs are in leg C up in the daily. The weekly is far better than the Intel weekly, and the monthly is at recovery highs in leg C, which is very positive. Well, when I listen to what he says and I kind of garner, just I get that information and I kind of put it together for myself, because I know that a lot of people in the business that they're in very often have no clue as to where their stock is going. I remember I had a good friend who had a company here in the Burlington area. It was a water treatment facility, and the stock was going so nice, and he kept saying, "Oh, this is just fantastic, this is fantastic." And then it started going down, and he kept saying, "Oh, geez, we're not getting orders, but we're getting inquiries from here and all around the country." And I watched the stock go down. So my thinking here is that we've got to separate. It's like when I always show that chart. I show the chart of the Dow from 1932, from the low at 44 to the 500% gain at 300. What was it? 195, I think. 195 in 1937-38. So if you had listened to the news on any one day, just read the New York Times or any newspaper, and that really was a depression. We have not seen anything even close. When people talk about the worst recessions, the Great Depression, I mean, the heart-rending stories from that period where people died from starvation. There were things going on that were just awful, and yet the stock market made you 500%. So I'm trying to do the same thing here. I don't listen to what people say. I try my best not to, although sometimes it affects you. You can't help it. The patina of negativity just kind of creeps in. Look at the SMHs. There's so far absolutely nothing wrong with the chart. So that's the cues, because a lot of the stocks...
Go back to the Q monthly and tell me what that shows you of a longer-term trend in the Qs.
That's what I wanted to come to. Now let's look at the Qs. If I go back, and I had a webinar at some point. I had a webinar where I talked about 2 lines. I happen to turn them into 4 lines, but it's really 2 lines. There's a top line, a trend line. We call it a single line, a trend line. We call them, if they're matching in parallel motion, channels. This is a rising wedge formation that if you break to the upside, it is really positive, because a rising wedge should collapse and take you to about between a 12 to a 22% decline, and then you come back and retest. So look at this. The MACD is just right now in the monthly chart at, let me just get it there. The MACD is 415.15, exactly on the line, and the monthly is 2 days old for May. So it's saying thus far it's still positive. The stochastics at 86% and still rising. The on-balance volume is doing very well. The relative strength line is, if I can find it, there it is way under where it was back in July of 2007, that previous top. So there's a little room to go. That's number one. Number two, if you take the trend line and you're very strict about it, let me just do this, from the high bar of December of 2001, that was just after the low of September of 2001, 27 was the number. Then the high, there was 43.24. If you take that trend line and you do it and you join it, I can even change it a little bit here because there's been some movement there. You join it to the next peak, not the peak that of October of 2007 at 55.07, but if you join it to the peak B and C and then coming up to D, that trend line says there's an outer trend line, and that outer trend line has a number of 72.96. I think it's worth taking a little moment because I want to squeeze the chart. People who have been looking at the Qs for a while might not know this chart, and I'm going to show the 120.50 high and the 25.05 low. I'll be right back with Joe in Boston talking about the Qs.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So we're on with Joe and Boss. We're looking at the Qs. It's a great question. What about the Qs? What is it saying? Well, what it's saying is, and I guess I'm on record way back in March of 2010 by saying that when the NASDAQ NDX 100 was giving a sell signal, that was not going to be a sell signal to sell mode, that I would never see the highs in my lifetime. Again, well, hopefully I have a very long life, and I'm here to apologize and say, oh my gosh, the S&P's at 120.51. They've come back. But right now, the Qs that is, but the Qs were at 120.50. They've had a peak ABCD in a monthly chart once from the 19.76 low back in 2002. Pulled back, and now then there was another one going to 2007. Peak deep, pulls back, and it goes to ABCDEF. Pulls back from the 2505 low of 2008. Remember, it made its low a little bit before the S&P. And then what happened in August of 2011 made it a peak F-top, pulls back just one bar, starts a brand new buy mode, and that buy mode right now is in leg D. But what's really important is that that trend line that I'm looking at is coinciding with the various peaks each time it got close to that trend line. So how the Qs handle the next either breakout or pullback is going to be really important, because they've just broken above the previous high of 70.58, that doji high peak E in the weekly chart from the 21st of September of last year down to 61.31. So far, all I can say is that this is really nice action. And if we're looking at the road, your question is, what does it mean? And my answer is that if we've had a rotation in the incredibly sharp pullback in from the 705 level in Apple down to the 380s, then it gives us time to heal, to repair damage and rotate through. And that could very well mean that, yes, there is a consolidation in May, but it isn't the sharp sell in May and go away. That would say to me we're going to get some kind of a market top of pretty good significance. I'm talking about into the double digits later rather than earlier. So that my answer to you is that so far this is very positive, and the real critical mass of the Q will be tested if the Q suddenly slide. They go to below the low of the 19th, the week of the 19th of April, 66.88. I would say if the Qs break under 66, not only has the monthly changed its character, but we will be looking at all these other sectors being impacted.
If they get up above like 72.50 into the 73 range, what does that mean?
Well, if it gets, that's very important, because what it says is I've raised the base. That's really what it says. It says the uptrend channel that I've drawn in here. Let me just move it a little bit here. The uptrend inside track is a technique that I call the inside track, has 68 to 67 as very important. And what it says is that if it goes to the 70-something area, we will have to look at how the rotation is going through the different sectors. Mm-hmm. Because if it's still rotating, if the XLK, or let's say the group that's impacted in the NASDAQ that is high tech, after all, if Facebook, let's put it this way, if Facebook comes alive, if LinkedIn becomes the market leader in the sector, and if so Facebook is up real nice, it's up one at 28.47, but that's nothing. The high that we're talking about was the high in the opening month of 45, round number high. Right. So it's got a ton. So you can understand that this rotation could in fact impact the indexes differently to what people think. Right. And that there were absolutely stocks that are now vulnerable. Remember, I spent about 20 to 30 minutes the other day going through everything from Hershey and saying it's making some kind of a top here, and a peak D in the daily, peak F maybe in the weekly, and F maybe in the monthly, but I haven't got the signals. But the defensive sector, like Kellogg's, they should take time out. Oh, look at Kellogg's today, down at 63.30. Yeah. So, and that's a peak F top in the weekly. So I'm looking at a rotation through the different sectors. Right.
Good. Okay. I just want to make sure we're on the same page.
Yeah. No, it was a really good question, because it forced me to quickly jump over to some stocks that I don't always talk about here, and that was good. Not only that, if you look at Kellogg's, it made a 261. That extension of 261% in the way I Fibonacci extensions, when you get above that, and it just fractionally went above it, that's where the stock becomes most vulnerable. Right. So thanks so much, Joe. I appreciate that. Good.
You got it. Bye.
So, folks, bye. Have a good day. And, folks, this is what I wanted to do. I wrote down a couple of things here. I would like to go through them while we've got a little bit of time here. Within the characteristic of the market, what I said is there are certain technical indicators that I put a lot of importance in. One is just 3 letters, VIX. And that tells me that if the volatility index constantly sees buying pressure by being in the teens to the low teens, preferably in the low teens if you're a bull, it says that you can use this as an indicator of substance. It's nothing to be taken lightly. You know, I used to talk about the three bears, the dollar, bonds, and the volatility index. Well, 2 of those have really fallen by the wayside, because the dollar, although it has these moments, extreme moments where it has a beautiful upthrust, it hasn't. Look at this. Look at this chart right here. While Joe was on, I was going to talk about this. Let me move this chart away, because I want to go one thing and one step at a time. move this chart away. This is my triple yield chart that I show my subscribers in my opening call. Folks, my service is the opening call. It is an incredibly detailed daily newsletter. I spend hours on this newsletter every day. That's not to say I get everything right, but I do spend hours, and I do it in using the ChapmanWave methodology. And within it, I always show this triple yield chart of the 30-year yield, the 10-year yield, and the 5-year yield. And look, they made peak E tops. Look how many peak E's have been very significant. And that was at 32.84 in the 30-year, and we're at 28.26 right now. So I'm watching that really closely because I believe that the Fed is determined to keep bonds at a level where the yields remain quite low so that they can get that housing market to continue to improve. But here, look, here's the UUP. Look at this trading range it's been in. If you can play the trading range, and some people play it beautifully, I would say think of it as narrowing and narrowing, and that the breakout will only come in the UPP, which is the Power Shares DB US dollar bull, when 23.14 was the high in July of 2012, the high, the weekly high, the week of the 27th, and until 24 is taken out and decisively taken out. This is going to be stuck in the range. And what we're looking at here is that the SPY, which had a high of 159.71 the week of the 12th, has gone to 159.72. And 159.72 says I can now print a peak E. Well, we're getting close. Peak D goes to E, and it does it very quickly. That's usually where you've got to be careful. So I'm being very selectively long at this particular point. I've yet to really implement the short positions. I've got them right there. I'm waiting for this bounce to see which of the stocks. I missed a beautiful entry on a number of them that I was talking about them making a top. Talk is no good. You want to put it into, you want to implement that. So the TLT is a leg B up here, but within the confines, just like the UUPs are within the confines, so the TLT is. Well, why? Because the Fed has the hammer out and going, gong, clonk, clonk, whack-a-mole. You remember whack-a-dollar? That's what it's doing. And what is it doing to the TLT? It's proper bond. They keep pushing it up. And that's really the reason why I think short-term trades are fabulous, but I don't want to get involved in either of these things. I don't think that's the place to be. So I showed you the bond yields, but have a look at this. This is a whole serious thing. I remember a long time ago. When I say a long time ago, I'm talking about, I think it was 2011. It could have been 2010. I don't remember. One of my subscribers emailed me to say, look at UNP, Union Pacific Corporation. Wherever it goes, the S&P follows. And I thought, oh, come on. And I just put, it's the same as when Harlan mentioned his 32, I think it was 32 period moving average. I love to try them out. I just want to learn. To constantly be young in your thinking and fresh in your thinking, you just have to. You cannot be blind to different technicals. So I put that on UNP. Well, look at this. There's UNP. Beautiful chart. I'm just showing it here. Let me just check to see how you can visually. There you are. You can see it very nicely. If you're looking at Tiger TFNN, this is TFNN.com. You go there, then you click on one of those three icons on the. It's just this unbelievable technology we have here. Anyway, here we go. Look at this. Let me just pull it back so I can make it nice and long. You see, UNP's up at I think it's all-time highs. SPY, all-time highs. GE struggling, flattening out. I always consider GE to be an important part of my Dow quartet, but let me just go back to my thinking on the three bears, VIXI, Dolly, and Bondi. The only one that's really left there that I consider to be very important looking out is the volatility index. And that's going to be really important because the dollar has been kind of in its own little orbit, and you've got bonds that also they're kind of stuck there. So the VIX is very important, and GE is important, but less important than when I'm looking at the overall market. Now look at this: the Dow Diamonds today 145.32. What's the high today? 145. I'm sorry, 147.93. I should know that. I wrote that in many times. And we're at 148.50. We're under that, but it's acting very well. Look, the pink one, if you can see it as pink, well, I'll call that pink. This is that pink one. The Qs weekly is just squeaking to new highs. I love that. And the IYM is just stuck. So if you're using IYM to be shorting, that's probably the best one. But in the meantime, look at these guys. They're acting very well. So I just wanted to give you some potpourri, a kind of a smorgasbord of what to choose and at what time you want to choose it. Do you want to choose your easy over egg and toast at 6 p.m. or 6 a.m.? These are the choices that you want to make. So I'm looking at this and I'm saying, hey, I love the action right now. I love the fact that right in the smack of the sell in May, we get a day like this. Does it say to me that May won't be a down month? At this point, I'm not even going to speculate on that. I don't really care because I'm becoming so bonded towards very specific stock areas. And I'm trying to place a longer-term position on a particular stock. It smacked me on the nose a couple of times for a 1 or 2% loss. We got it this morning. I know it wasn't a perfect entry point. I don't care. I think that this is a turnaround situation in the United States. So we're along that position. And I'm giving it $1. That's $1 is about 8% risk at this particular point. I don't do that. But I'm trying to be as objective as possible because I think it is a good position to be in. So the question, that Basil should talk more about in the longer term. We're still one particular stock from November and others that we've had for quite a while. I've been trying to keep positions as long as possible. We can't get stopped out the very hour we get in. That's just the way it is. So now let's go back to certain things that I want to look at. If you're looking at the IYC, which was a U.S. consumer cyclical sector ETF, iShares, they're breaking out. They could have double topped, and they've broken out. I have to call this now new leg B. It could be an E, but everything about it says I'm going to go B/E. And that's very important, and I always have to drag these out. So see this? There's a little V-shape. It's actually like a V-shaped cup and ladle, if you can get a V-shaped cup and handle, that is. But in fact, what it's doing now by breaking out, it turns out that it's more like the ChapmanWave cup and ladle. And the cup and ladle pattern says when you break out, you invariably go to at least a D. I just have to feel strongly about this. Yesterday we were down. It felt so terrible, down 120, 130. No, nobody's saying anything. What is your feeling? If you're short, what's your feeling right now? If you're long, what's your feeling right now? If you're long, do you feel the same now that you felt yesterday? So you understand, in the moment, you've got to be able to step back and say, no, I'm looking at the chart patterns, and at this point, with a 9-period exponential moving average in the IYC at 100.61 up 92, tell me what's wrong with this chart. Now, if you want to use volume, there was a big volume spike back on the 1st of April, and volume hasn't been very good. But if you want to use on-balance volume, the on-balance volume is still rallying. So it also depends on how you read these things and how you use your own techniques. So I wanted to cover the IYC because to me this is consumer cyclical, all-time highs. I'm going to say it again, consumer cyclical, all-time highs. Bernanke is still priming the pump, and yet we're at all-time highs. I'll be back. Basil Chapman, 877-927-6648. Dow's up 116, S&P's up 40.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I wanted to. I was going to run through a couple of the commodities, but as an amateur, all I do is I do the chart work. I don't trade them. You've got a wonderful show coming up here with Larry Pesavento, and today we've got the premier show, the Commodities Hour, with Andy Hecht. And Andy is going to be on Tuesday and Thursdays at 3 p.m. Eastern Time. Andy's the author of a book called How to Make Money with Commodities, available now on Amazon.com. I'm thrilled to welcome Andy as a new member to our TFNN crew, the host series, and that's fabulous. And so I'm not even going to bother about that. But I did see something here in the den about the XLE. The XLE, this is a very good example of what I'm talking about. There's a certain pattern that I look at. You can see it in the IYM, and now you can see it in the XLE. Made a peak F top in the weekly. It's made a peak C in the monthly. This is the S&P Select Energy Spider Fund. The MACD and stochastic are very strong still in the weeklies, and there's a little pattern that's forming in the daily that is the same as the monthly. It is a wedge formation coming to an apex, and it's broken above that and it's holding the 9-period moving average. So I would not be surprised if two things happen. One is that it breaks above peak B and goes above 78.30. It's at 77.96, up 91 cents right now. And that starts leg C. And then it tackles the high bar of 79.62, the doji high of the 11th of April. More importantly, that resistance is coming into right there at 78.80 to 79.10, that downtrend line. That is going to be important. Can it break out? Can it go to a new recovery high? Well, the monthly chart says yes. It doesn't say when. So I'm going to be watching this very closely. So thanks for bringing it to at least my attention, Angie and the XLE. It is very interesting, and the 120-minute chart has made a peak A, B, C, D, recycle. A, B, C goes to D right there. It even goes to an E, pulls back. Yes, very important. If it goes above 78.30, let's call it 78.31, then the breakdown candle of the 12th of April at 78.86 will become a target. Very, very, very interesting. So there was a quote in the day. The day is just such a fabulous medium by Oda Nabunga. Our defeats are just as much part of us as our victories. To love life is to love ourselves and all that makes us. That's really nice. I like that. It's very nice. It's the practicing of it that's even more important. Let me give you a quick summation. In the Dow, before I wrap up the show, and folks, today's Thursday. I'll be on with should be on with Tom later this afternoon in the 5:20 hour for an interview. But my service is the opening call. It's a very comprehensive look at the markets. As I say, we've got long positions here. Almost all of them are working really well. One is up 40% or so, and the latest one that we just got up is up about. Just want to double check. About 20 points, actually. So, yeah, 178 to 198. So we've had some very nicely up. We've had a couple of misses, or at least we've had stocks that gave us losses of 1 to 2 to 3%. But I like to let the winners run as long as I can. Now, look, this is what I'm looking at. The weekly, I'm not going to do the daily, because if the daily on the Dow goes above 14,888 at any point, that's really important, because it goes to unofficial leg D in the weekly, but the Dow Diamonds, this is very important, will be officially, there's no question about it, leg E up. And that says, yes, you are getting to a point where you've got to be somewhat careful. Will it be sell in May and go away? I don't think so, but certainly there could be a sell in May and a pretty quick and sharp decline. If everybody piles in like they did yesterday, it could be really sharp to the downside and maybe get it over in 10 days and then we start a rally. We'll see. Thanks for being here, and I will be back. I will not be back tomorrow. I'm not going to be able to do my show. I'll be back on Monday. Thanks for being here.